A very warm welcome to you guys. Thanks for joining us. And for those who are watching back the recording, thank you for tuning in. So today we have the fabulous qualified accountant Emma Bale, who will be taking us through how making tax digital will affect us as sole traders and property owners. And we'll be going through the practical steps that you can take to help get prepared for that 2026 change. So Emma has a massive sore throat today, which is a brilliant timing, obviously, for our second webinar hosted by the Evolve Accounting team. So if she has a coughing fit, I've promised not to do a dance or to do any singing, but I might have to do those things. So we'll give her a little pause just to get her voice back and perhaps have a little conversation if she does need a bit of time. So just to give you a bit of background, as part of Evolve Accounting's mission, vision and values, our focus is to make tax and accounting as simple to understand as possible for everybody. So it's a family-run business, and we appreciate that finances can be really, really confusing. So we want this to be a safe space for you today. So we always say all questions are good questions. There's no such thing as a silly question. If it's sitting in your mind and you need to ask it, just pop it in the chat if you would prefer, or you can directly message me. My name's Lynette, and I do the marketing and help support Emma with the marketing of her business. So that's why I'm here. I'm also a sole trader, and I also have a little bit of property. So I'm very interested to hear this, Emma. So I'm a target market. I think everyone else is as well, which is awesome. So I'll be keeping everyone on mute as we go through. But if you want to ask questions, pop them in the chat and I'll interject at an appropriate time, or we'll go through things in more detail at the end. So we're going to try and keep it as informal as possible, because accounting can be, not all of us find it the most exciting thing in the whole world, but we're going to try and make it exciting, aren't we, Emma?
Yeah. We try. Tax doesn't have to be taxing. We will try.
Exactly. So making accountancy and finance good for non-financially minded humans. And that's always a good one.
That's exactly the game.
So we're going to be using slides to help different learning styles. We appreciate everyone learns differently. So although we tend to have more of an informal setup, the slides are there to support your learning, and so you understand if that's how you learn better. If you want to, you can change the settings on your Zoom to make the slides bigger if you're live with us now, or you can turn the slides off, however you prefer to learn. So if you have any questions about these settings, just let me know and I can help you backstage. So Emma, let's get this throat ready.
I'm I'm clutching my Lemsip here, which I'm hoping is going to get me through. But again, I apologise if when I woke up this morning, I went to speak and no sound came out, and my little girl just pointed and said, "Mummy, you've got no voice." So I'm doing all right now. I'm going to hold on, but hopefully I'll get through the hour. Thanks, Lynette. Thank you. Right, okay. So first of all, just a little bit of an introduction. Some of you already know me. There are some faces on here that I don't know and I don't currently work with. So my name is Emma, and I am the co-founder of Evolve Accounting. The other founder of Evolve Accounting is my husband, Simon, who is off screen, sort of supporting in the wings. And between the two of us, we run Evolve Accounting. We've been going about 10 years. So it was actually our 10th business birthday in October. And we are, I mean, I've been an accountant, worked as an accountant for about 25 years. So but this business is about 10 years old. And we specialise in supporting small businesses with their business finance. So that's sole traders, limited companies, rental property owners, limited companies, and offering all of the usual tax shenanigans, their tax returns, VAT returns, payroll, etc. Where my particular interest in is not just producing the numbers, but supporting clients and understanding the numbers. And I do have a background in management accounts from when I was out in industry. So I have a particular interest in just trying to bring those numbers to life, really. I think there's a lot of us out there. When you're a small business, you're wearing lots of different hats, aren't you? And you are your own HR department, you are your own IT department, you are your own finance department. So it's just making that a bit more straightforward for everybody. So that's where we are. I'm going to open my slides up now and I'm going to work my way through. But as Lynette said, if you've got any questions throughout, just say, and there will be a little bit of time at the end as well to have a bit of a discussion if anybody wants one. So let me, where do I press the wrong button now? Okay. Immediately gone onto the wrong page. There we go. Right, that's a great start.
It always happens, Emma, don't worry.
Absolutely, yes. Okay, so Evolve Accounting, that's us. So first of all, running through what I'm going to talk to you about today. So I'm going to talk about what is Making Tax Digital for income, tax and self-assessment. So that's always known as MTD ITSA, because otherwise it's a bit of a mouthful, but what is it? Why is HMRC introducing MTD ITSA? Who will be affected by it? When is it happening? And why do we need to plan in advance? And then the nitty gritty I put at the end. So I'm going to show you sort of a little bit more detail in terms of the tools that you might need and might help you in order to be MTD compliant when this rolls in. And as I said, there's a little bit of space at the end to answer some questions. So ploughing straight in. What is Making Tax Digital for income, tax and self-assessment, also known as MTD ITSA? So in a nutshell, it's keeping digital records and then sending quarterly returns to HMRC. And all of that is creating a digital footprint. So if I think back 10 years or so ago, or more, a lot of my clients were, I would say the majority were keeping the records using paperwork. So quite often clients would turn up once a year to the office with their folder or their shoebox or their Tesco's carrier bag, and sometimes even a bin bag full of paper receipts. And they would sort of hand it to their accountant once a year, and we'd sort through that and sort of make sense of it and turn it into a set of accounts. There are some very obvious problems with that, and which I'll come to, but HMRC are trying to move everybody away from that very paper-based record keeping. And so step one of all of this is HMRC really want to get everybody keeping digital records. And I would say a lot of people are now, but there are some who are still using their paperwork method or using a bit of a hybrid of the two, or keeping digital records, but it's not really quite enough to meet the needs of HMRC now. The quarterly tax or the quarterly returns will pop out of the digital records. So the idea is we will be all keeping our digital records using MTD compliant software and then making a quarterly digital return to HMRC directly from that software. And this is creating what HMRC is calling a digital footprint. So even at the moment, if you even if you are keeping digital records, maybe you're using a spreadsheet or using some form of bookkeeping software, there's still a step between your bookkeeping and submitting to HMRC. So it could be that when the data is transferring from your spreadsheet to HMRC, it could be that there's some manual typing in or some copying and pasting or whatever, there's a step. And HMRC want to get rid of that. So by having your bookkeeping in MTD compliant software and making the submissions to HMRC directly from that bookkeeping software, you eliminate that step. So there's a stream, a footprint right the way through from your bookkeeping to HMRC. So that's what it means. Why is HMRC introducing this? Okay, so the first one is to reduce the risk of errors. So if you think about, the bin bag full of receipts that I've been handed in the past, that we're then fishing around in there trying to pull out the receipts and, bits of paperwork, there's an enormous risk of errors there. There's probably all sorts of bits of paper missing. Or, I remember one client I had years ago, I think he's retired now, bless him, he was a builder. And we used to joke every year that he would open the back of his van and sweep all the receipts into a bag and then sort of hand it to me. And there'd be footprints and bits of plaster on the paperwork, and be struggling to read it. So, that paperwork, there's a lot of errors around that. So, and even just from between, even if you are being very meticulous and you're updating your spreadsheet, there's still, because there isn't that digital link between your spreadsheet and HMRC, there's still a risk of error in transferring the data from one system to another. So they're trying to get rid of those errors. I see this as a good thing. Now, I know whenever HMRC asks us to do something new, there is a collective groan, including the accountants. We go, oh, they're asking us to do another thing. It's going to be another thing. It's going to cost me more money. It's going to take me more time. I've got to get more, technology or whatever. And I get that and I agree. But actually, I think there's a real opportunity here for businesses as well, because it's going to give you more visibility into your business. So instead of, I think there's a lot of business owners that they're so busy running their wonderful businesses that they only then look at their accounts and their tax at the year end once a year. And certainly for some business owners, their profit or their tax comes as a bit of a surprise once a year, because throughout the year they're not looking at it. So this is going to force those business owners to look at their finances at least once a quarter, to record it in a sensible digital way, and look at it and analyze it and submit it once a quarter. And while that is creating an extra job to do, it's also creating an opportunity for you to get to know the finances of your business more, and therefore creating a lot of opportunity for you to grow your business, to plan, to financially plan, to budget, to. So I think there's huge opportunities there for the business world. Ultimately, what HMRC are doing here is they want to make sure that you're paying the correct amount of tax. That HMRC, I was looking on their websites the other day, they estimate the tax gap for self-assessment is about £5 billion, which is it's a big amount of money. Now, I don't think HMRC is saying that all of this is fraudulent. I don't think they're saying that. Obviously, there are people out there who are deliberately defrauding, the tax office, and I'm sure that does happen. Not on my watch, but I'm sure it does. But I think HMRC are recognizing that there's a lot of incorrect information being submitted and tax opportunities and tax collections being missed. Now, as an accountant, I believe in everybody paying the correct amount of tax. So I don't want any of my clients to see them paying too much tax because there's issues in their record keeping. So if we have lovely, correct records, then your accountant has the best possible chance of giving you the legally lowest tax bill that they possibly can. So for HMRC, they're seeing an opportunity to increase the tax collection to make sure that they're getting that missed tax. But again, for those lovely, honest business owners like you and I, there's a real opportunity to make sure we're not overpaying our tax as well. It's going to be correct. So that's why they're bringing it in. Who will be affected by MTD? So this has actually been rolled out since 2019. So I've been very aware of this for quite some time now. And they've been bringing it in stages. So if you are a VAT registered business, you are already MTD compliant. So from 2019, those businesses that were above the VAT threshold, so at that point it was 85k, that's now 90k, they had to do this anyway. So they had to get themselves MTD compliant software and are having to submit their VAT returns directly from their software. In 2022, that was then rolled out to those businesses who were voluntarily registered for VAT. So anybody now that is submitting a VAT return, a quarterly VAT return, is now MTD compliant. So now HMRC are rolling it out to the next group, and the next group is you guys. So that is self-employed individuals, landlords who are submitting their accounts or their tax on self-assessment tax return. So this is not, if you are a limited company, if you're running a business through a limited company, this is not you. This is also not partnerships. So partnerships is a bit of a funny one, because if you are in a partnership, you are submitting your profits from your partnership through a self-assessment tax return, but you are also doing a partnership self-assessment tax return. And that creates some technical issues HMRC side. So at the moment, they're excluding partnerships from this. So it's just individuals and landlords. Partnerships will get pulled into this in the coming years. There's plans for it. But I think what they're trying to do is get the individual self-assessments working under MTD first before they move to the next group. So when is MTD? It's happening. So again, it's phased. So the VAT registered businesses are already in here. Income tax self-assessment is coming next, but that's going to be a phased entry as well. So from April 2026, if your sole trader business or your rental property business has an income So that's before costs. So sales turnover, or in the case of rental property, rent from your tenants. If that income is £50,000 or more, then you will be pulled into this. You will have to start making quarterly tax or quarterly returns from April 26. Then the following year, April 27, are going to lower that threshold down. So that will be if your income, your turnover is £30,000 or more, you'll then need to start making quarterly returns.
Emma, I've got a question at this point.
You have.
A bit of a rest. Just
Thank you.
how does it work? So let's say you're sitting potentially between, so you're projected, you're not sure about your income and it's coming in, and it's a surprise, for example. So April 27, that you've got to be MTD compliant for 30,000. How do they know, or how do you know whether you're 27 or 26? Do you have to do it based on your quarterly income?
So it's a really good question. Do you know what? I have scoured the HMRC guidance, and there isn't actually anything clear at this point of exactly how they want to assess it. So I think the assumption amongst my colleagues is that it's going to be looking at the last tax return. So if your most recent tax return was over 50, then you're going to need to start making quarterly returns. Or then from 27, if your most recent tax return was over 30, then you'll start making quarterly returns. And that's the best that we can do at the moment. There will be small. This is the thing about this, that the guidance has been coming in dribs and drabs over the last few years, and they've actually revised it and changed it. But at the moment, we believe it is based on your most recent tax return. So if you get to, so if your year end will be 5th of April, 2026, if at that point you were at 50k turnover, it will be that year coming in that you'll be doing your quarterly returns. Does that make sense?
It does. And Juliet said she's a sole trader and has a salaried employed role as well. So how does the threshold work for this situation?
Right. So that's a really lovely question, Juliet. Thank you. So it doesn't come into it. So PAYE, dividends, bank interest are not included. So if, as Juliet just said, if you have a PAYE job where your employer is paying you through the payroll, you receive your payroll, they're doing tax at source, but then also you have a sole trader, your self-employed bit on the side, HMRC are only looking at the income from the sole trader. Okay. And that's the same for, limited company owners, rental property. So you might be working through a limited company and receiving most of your pay through dividends, which you then declare on your self-assessment tax return. They won't look at the dividends, but you might also be renting a property privately and putting that on your self-assessment tax return. So they're not interested in what dividends you're receiving. It is just the rental income from that rental property. So, in Juliet's example, maybe you get, your PAYE job might be £50,000 a year, and then your on the side self-employment is £30,000 a year. They're only going to be looking at that 30,000. So if that was you, then it's April 27 that kicks in for you.
Thanks, Emma.
That makes sense. Yeah, it's a really good question actually, and I know it's one that came up because they were going to roll this out at April 24, and that is one of the when they were doing the consultancy, and I got involved a little bit in that when they were consulting with people in the industry. That's kind of like a major question that kept coming up, and it's important to make that really clear to people. Okay, why do I need to plan in advance? So I'm talking about something that's happening in April 26, and for some people the year after that. April 26 is less than 18 months away. So I know it feels like a really long time away, but it really isn't. And there's a lot to think about, and there's a lot to plan to make sure that we're ready to go. Now, here at Evolve Accounting, we've been planning this for years. We've been looking at this for years because they were originally going to roll this out for MTD. It's in April 2024. So we started planning, a couple of years before that, and started talking to our clients and started thinking about how we'd manage this, how we'd support our clients. And then HMRC decided to bounce that for 2 years, push it forward for 2 years. And the reason they did that was partly because HMRC themselves weren't ready because it's a, you know, that's a huge amount of extra work for them to do, a lot of processing. They've got to have their tech in place, but also for business owners, and also for accountants, actually agents as well. So there's a huge amount of extra responsibility that we're going to have. And I think they just realized that people just weren't ready. So they pushed it back for another 2 years, and they've changed the scope of it a bit. So there's certain things that they had in there that they're not going to ask anymore. They've listened to the accountancy community and to the business community, and they've kind of refined it and made it a little bit more sensible. There is still parts of the guidance that is still not available. There's still things that are still not completely clear, but we're sort of getting there now. And I don't think they're going to push it back any further. So I do think April 26 is when it's going to happen. So why do you need to plan in advance? So first of all, and this is something that's been discussed a lot over the last few years within the echo chamber that is the accountancy world, but I mean, Lynette and I were talking about this the other week as we were planning this, and you know, I'm really aware of this, my colleagues are really aware of this, but I feel like this isn't something that's been discussed with you guys, with the business. So I'm
rely on you to be in that echo chamber.
Yeah, exactly. And you know, accountants have all been literally looking at each other going, how on earth are we going to resource, like how are we going to resource this? And I sort of looked at some stats on this. So 12 million people every year submit a self-assessment tax return to HMRC. And of those 12 million people, 40% of them DIY. So that's 4.8 million people are submitting a DIY self-assessment tax return every year, which I find absolutely I can see in Lynette's face. Now, some of them will be doing a really good job.
Oh, by the way, Emma, that scares me to death thinking about doing your own, because I use Emma as my accountant, and it's been the best business decision I think that I've ever made, actually. So just there's a little big up there, Emma.
Thank you. Well, this is it. And so I think some of them are doing a great job. Some of them really won't be. And I do several DIY fixes every year. So there is a lot of kind of dodgy DIY jobs going on out there. I think what's going to happen in 26 is that there's a lot of these DIYers are going to think to themselves, do you know what? It's been fine for the last couple of years when once a year I've just got to log on to my government gateway and I can type the numbers in and press submit, and it's probably about right. But this is a whole different ball game now. I've got to have MTD compliant software. I've got to do this once a quarter. I've got to submit it in a particular way. So I think there is going to be a significant number of people who currently don't have agents just entering the market. There's just going to be a lot of people looking for an accountant. And that's going to be a challenge actually for us accountants, because we've already got our clients, we've already got our client list, and our client, if I think we've got what, 200 self-assessment clients who we do a self-assessment tax return once a year for. And all of a sudden we're now going to be needing to do all these quarterly returns. So our workload, every accountant's office in the country, the workload is suddenly going to massively increase, and that's going to be needed to be resourced. And then the third pressure is that agents are leaving the market. Now, we saw this when MTD for VAT came in. I was actually an accountant that I know I was speaking to a couple of months ago. He very close to retirement, so he timed his retirement with the introduction of MTD for VAT, because he just went, you know what, I'm done. And I know of a lot of colleagues, this has been chatted about a lot, where there is a lot of accountants close to retirement who are saying, do you know what, MTD ITSA comes in, that's when I'm going to retire. Or there are some accountants actually who are very strategically saying, we're going to move and push towards just serving the larger businesses, limited companies, VAT registered business, so that we don't have to deal with MTD ITSA. So we're going to have this real pressure actually with existing clients, who we will always prioritise, of course, DIYers coming into the market looking for a new accountant for the first time, and business owners who currently have an accountant but their accountant is retiring or not doing this anymore, also coming to the market. So 2026, I think, is going to be a really interesting time. I think there's going to be a lot of people wandering around the wilderness looking for an accountant. What I'm not trying to do is scaremonger anybody into kind of signing up, but I think it's something.
So just just to clarify, so there's going to be more demand. There's going to be potentially less actual accountants.
Less actual accountants.
Complete that work that needs to be done.
Exactly.
So are we saying then that the time between now and middle of perhaps 2025 is the best time to be securing your accountancy support? Is that what? Okay.
I do. I think I do think it's this is why I'm saying plan in advance, really thinking about that, thinking about, if you're a DIYer, being very sure that you are going to continue to be able to do that for yourself. And if you're not very sure you're going to be able to continue to do that for yourself, it would be worth, finding yourself accountant, and also thinking at checking whether or not your existing accountant is still going to be able to provide that service for you.
And also, can we put it, I know that we've had this discussion before about qualified accountants, because there are accountants which don't actually have a qualification, isn't that right? And that would you suggest that could make it potentially a lot more complicated to do this?
Yeah, so I see two problems. It's a really good, yeah, that's a really good question actually. In that I see two problems. So at the moment, it is perfectly legal to provide accountancy services, to set yourself up as an accountant without holding a formal qualification. You just call yourself an accountant. HMRC, I mean, it was actually in the budget that was announced a few weeks ago. They've actually put it in the budget that the government, HMRC, are going to change that. So they are going to make it mandatory for accountants to be regulated in some way by an accountancy body. I hold my qualification with the Chartered Institute of Management Accountants. I have to renew that every year. So I think there's sort of several prongs here that when HMRC bring that in, and they haven't specified a time, but in the coming years, there will be even more accountants leaving the market because they're not qualified and they either can't or don't want to do the qualifications. And that's going to create even more pressure. I'm also concerned, we see these sort of trends with these kind of slightly dodgy online accountants, businesses coming on board. So there's been a massive thing the last couple of years with research and development claims. We've had all these sort of dodgy companies going online claiming that they can get you lots of extra money for R&D claims. And then there's been a sort of like a string of court cases this year where they've all got found out and HMRC have taken them all to court and all of these clients have had to pay all this money back. And I do see that this is going to be another potential. We're going to start seeing all these adverts for these online companies who suddenly sprung up saying that they can do your, quarterly MTD returns for cheap or for free. So I think there is going to be this sort of risk around making, who's doing it, who's acting as an agent, who's qualified, who's regulated to do it. So yeah, I think there's a real resourcing issue, which is a bit, like I say, this is something that, amongst the accounting community, we've been talking about this for a few years, like, wow, that's a resourcing issue. But I don't think anyone's saying that out loud. So I'm saying that out loud. Yeah, it's something to think about.
Thank
you.
The
other thing to really think about is the accuracy of your book. So what a lot of you guys are doing is doing your own bookkeeping and then giving that bookkeeping at the end of the year to your accountant to then do your accounts. So you're either populating your spreadsheet and emailing that over, or you're using your bookkeeping software, QuickBooks Xero, Free Agent, whatever. Now, I can't think of a single client that I have that when they send me their books, I don't have to do some sort of correction, a little bit of work, tidying up work before I can do the year-end accounts. So this is going to be a real resourcing issue, again, when we're thinking about quarterly returns, because you think about a practice like ours, we've got about 200 self-assessments. All of a sudden, let's say in 2026, half of them may need quarterly returns. I've got 100 people sending me their bookkeeping every quarter, and all of them need some tidying up before we can then submit the returns to HMRC. So again, we're going to have this resourcing issue. And that will need to be, do we hire staff? Do we work overtime? What do we do? And I think that's when you're going to start seeing there is going to be a fee, obviously, for doing these quarterly returns on behalf of clients. But I think if we've then got bookkeeping corrections and, all of that to add in, that's going to drive your cost up. So I think, the best way that you can keep your costs down is use this 18 months to really upskill yourself in terms of your bookkeeping skills. All of the bookkeeping software providers, so whether it's Xero, QuickBooks, Free Agent, they all provide really great online training. I'm certainly saying to my clients at the moment, drop me an email through the year, ping me over your spreadsheet. I'll have a quick look, see where you are, because I'm quite keen to sort of upskill everybody between now and April 26, so that when we get to April 26, we are a well-oiled machine. How that should happen is we send out the reminder, your quarterly return is due. You send the books back. They're all beautifully done. I do the checks, produce the return, send that to HMRC. We're done. That's going to keep your costs down. You might decide with all of this that this is the time for you to put a bookkeeper in place, for you to engage the services of us or an external bookkeeper. And, it might be that you say to yourself, right, fine, doing the bookkeeping, annual accounts, that's been fine for me alongside my business, but this is becoming too big now. And, I need time to run my business. So you might decide that now is the time to outsource that so you can focus on your business rather than, on the bookkeeping. But again, because of the aforementioned resourcing issues that I can see coming out of this, I think this year is the time to start thinking about that if you're going to move, your bookkeeping onto professional bookkeeping services. So I think we've got this less than 18 months now for this real planning to really think now, how is it going to be resourced? Who are you going to have doing these quarterly returns for you? Are you going to do your own bookkeeping? Are you going to have somebody else to do your bookkeeping? What are you going to do your bookkeeping on? Spreadsheet or software? And I will talk about that a little bit shortly. But yeah, this is a time, I think, when you really start thinking about how massive a change this is going to be, that less than 18 months now actually feels like a really short time away. Right, okay. I will
have a drink, Emma.
Pardon?
Would you like a little drink?
I would, thank you.
It begs the question. I wonder, why is this a surprise to us all? It's because we're not in those echo chambers again, is it? I guess.
Yeah, I think, yeah. I mean, I think all accountants have taken different approaches. My approach has been, and I've got a few of my clients on the webinar today, my approach has been to sort of keep communicating. So I've been sort of mentioning and emailing, and I've done a couple of blogs on MTD over the years to kind of get people. I think some accountants and colleagues that I know have taken the view like, oh, it probably won't happen and they'll probably delay it again. They've just sort of been ignoring it. I don't think HMRC has really done their part. I don't think they publicised this as much as perhaps they could have done, although they certainly have put information out there. I think a lot of it is, and we're all guilty of it, right? We're kind of that busy working in the business that we don't necessarily have time to lift our heads up and look at some of the things that are coming down the track. So I think it's all of those things, but I think certainly there's a lot of business owners who aren't really fully aware of this coming and how big a change it's going to be to their business.
While you have another drink, Emma, I just want to say, Matt, you're doing a really, if your business is painting and decorating, you are doing a fantastic job of inadvertently selling to us all, because I now need your number so that I can get you to come and paint my house. You're on mute, Matt.
Hi, Matt.
You're on mute, lovely.
You're on mute, my love.
Can you hear me now?
Yes.
I didn't realise any of you could see me. I didn't even think that I was visible.
Well, is that your business? Painting and decorating?
Yes.
Can you drop your number in the chat, please?
Thank you.
Anyway, back to MTD. We've been admiring the skills. The paint stroke is fantastic.
Thanks.
Have you had a chance to have a drink, Emma?
I have. I've rested my throat for a minute. It's brilliant. Okay, so the nitty gritty. So obviously we've talked so far about the theory, why it's happening, who it's happening to, all the background to it. But I sort of wanted to get into the specifics a little bit today, because I think with these things, sometimes you sort of talk about this thing that's happening in 18 months' time. But I think it's helpful to really see the specifics of it. So the nitty gritty. You will need to in order to comply with MTD for ITSA, you will need to do your bookkeeping either on MTD compliant software, examples of which are Xero, FreeAgent, QuickBooks. There are others on the market, but those are the main ones that we work with. Or to use MTD compliant spreadsheet used alongside bridging software. You will then need to use that software to do quarterly returns directly to HMRC. A separate return for each trade or business. So this is really important. If you are a sole trader, you might be a painter and decorator like the lovely Matt there, but also have a rental property. You will need to submit a return for each of those two trades. So that will be 2 every quarter. If you have 2 businesses, you might, have a dog walking business and a hairdressing business reported separately on your self-assessment tax return. That's 2 returns, 1 for each trade. There will be penalties for late submission, and it's going to be on a point system. So if you're late for 1 quarter, you'll get some points. If you're late again, you'll get some more points. Once you reach the threshold, it's a £200 penalty. So there will be consequences to this. The tax payment deadlines are going to remain the same. So just because you're doing quarterly tax returns doesn't mean you'll be paying quarterly for now. It'll remain the same tax payment deadlines that you currently have. I'm saying for now because I think it's fairly obvious that at some point in the future they'll be moving to quarterly payments. And I don't necessarily think it'll be a bad thing actually, because it would spread your tax throughout the year rather than having these bigger lump sums at the end. So, but they haven't got any plans for that at the moment. So we don't need to think about that. In terms of the submission deadlines, so as many of you will be aware, the tax year end is the 5th of April. So some of you will be drawing up your accounts to the 5th of April. HMRC has always said that they're quite happy for you to draw your accounts up to the 31st of March and it will be treated the same. And some businesses prefer that because actually looking in whole months is an easier way of viewing their business rather than this kind of to the 5th of April thing. So looking at this little table here, if your quarter end is the 31st of March / the 5th of April, your submission deadline will be the 7th of May. 30th of June, 5th of July, your deadline is the 7th of August, and so on. This means that if you elect to have a calendar end, so if you elect to have your year end the 31st of March rather than the 5th of April, so you're counting on months, you actually get an extra 5 days to get these returns done. So certainly my advice will be to all of my clients, let's move your reporting, your year end to that 31st of March, and then let's do calendar reporting. We've all got an extra 5 days to get this done. And actually, in many ways, it's a nicer way to run your business anyway, to view your business finances. So I think it's a really important thing to think about there. A few extra little points. HMRC no longer require what they're calling the EPOS, the end of year statement. So we've had several reiterations of this. They were going to bring this out in April 24. They've delayed it, they've changed some of the requirements. One of the requirements was in addition to all these quarterly returns and the year-end tax return, you're also going to have to do this end of period EOP statement as well. And when they've consulted with the accounting world, the business world, they've decided that's just another step that's unnecessary. So if that's something that you're aware of, you can breathe a sigh of relief. At least they simplified that and taken that out. Another quick note on joint property owners. So HMRC, this is another thing that HMRC hasn't brought any guidance out yet. They're still working on it, but I think it affects a very small number of people. So this is if you jointly own property and each of you for 2026, each of your rental income is 50 grand. So your property business would need to be a total of 100 grand turnover a year. So you've got to assume there's going to be multiple properties in this portfolio. So multiple properties, joint property owner, then HMRC is still working on how to simplify that for you. They will be bringing out some more guidance. So I am going to now quickly show you a little example of MTD compliance software so that you know what we're talking about. It's not just the theory. And I'm going to quickly show you MTD compliance spreadsheet so you can see the difference between the two. And before I do that, I'm going to have another drink of my Lemsip.
Do we have any questions so far? I know that we've had a couple in the chat, but is everyone keeping up? Does everyone understand? Has everyone got any kind of questions while we just take a little pause for Emma to have a drink? Brendan, thank you. So does the threshold apply to your total income across multiple companies?
What do you mean by company? So a company is a limited company and they are not being included. They are not within the scope of this. Is that what you mean?
I meant in business in terms of like the types of business, like you said, the hairdresser and the dog walker, etc., etc.
Yeah, so it's across, it's your combined. So yeah, if you're a hairdresser and a dog walker, and you've got 25 turnover, one 25 turnover, the other, put them together, that's 50. Then you need to do this from April 26.
But
If you
still
had one that was over 50 and one that was under 50, would
Then
you still have to do both?
no, you'd still need to do, you need to do the one. That's a really good question, actually.
Should we find out, Emma? And
I'll need to find out. That's a really good question. Yeah, I don't know. And I'm just trying to think, where in the guidance have I read? I don't think they've actually specified that in the guidance at the moment, because I've gone through this thing front to back, and I don't think they've specified yet. That what they have specified is the combined. So if it's a sole trader and a rental property, for example, and they've specified it's per trade, or per business. I don't think they put that in the guidance. Really good question. I'll find out.
Okay.
I'll get back to you.
Thank you.
so in theory, you could have 2 or 3 businesses
Mm,
and some property.
Yeah.
And be needing to do all 4 of those
yeah.
4 times a year.
Mm.
And if it falls over the threshold of 50, it
Yeah.
needs to happen ASAP. Okay.
Yeah.
Thank you.
Yes. So I'm going to quickly, where was I? I'm going to have a look at Xero first. So obviously there's lots of different softwares on the market. I can't show all of them to you. I'm going to choose Xero because that's my favorite, if I'm honest with you. It's a little bit more expensive than the other. It's got a few more bells and whistles, but I think I really like it. And the way the VAT returns work within Xero is really lovely, and I think the quarterly returns are going to be very similar. So I'm just going to pop over and make sure that it's the demo company, and I haven't accidentally got one of my clients on screen first. So bear with me one tick. I'm actually sharing.
You unshare, that's it, yeah.
Right, yeah, there we go. That's okay. It was fine.
Is everyone finding this helpful?
Yes.
Yeah. Okay.
Good. Okay, so Xero. Hands up. Has anybody looked at Xero or using Xero or no? Right. Okay. Xero, like the other softwares, is a
Would it be helpful to find out if anyone else is using other software?
Oh yeah, that's true. Anybody using
So,
anything else?
Anyone
QuickBooks?
using anything else? Anything like Free Agent or anything else?
No. Okay, that's fine.
Okay.
So this is kind of the gold standard, right? So if you're going to do bookkeeping, the best thing to do is do it on a bookkeeping software that is designed to do bookkeeping, Xero being one of them. Obviously, I'm not going to train you how to be a bookkeeper or do Xero in the 5 minutes that we've got, but I just want to give you a bit of an overview so you sort of see what I'm talking about, so it's not this theoretical thing on a slide. So the way all of these bookkeeping softwares work is they link to your business bank account. So on this reconciliation page here, you can see we've got a business bank account here. You've got a business savings account. You might be a company or a business that uses PayPal or Stripe or various other. You can have all of those feeding. There'd be a different box for if you had PayPal, you'd have a box here. If you were a cash taking business, you'd have a box here for cash. So I'm just going to look at this one on this demo company. So if we click on this blue box, it's going to take you to a screen which is the bank feed. So this is how this is linked to the business bank account. So each one of these lines represents a line on your bank statement, and it feeds in. You need to refresh it every 3 months or so, but it feeds in. So what you're going to do with this page is you're going to tell Xero what each of your bank transactions are. You're going to categorize them. So if we look at the first one here, we can see that we've received, there's a spent and received. We've received just over £6,000. And Xero can see that we've sent an invoice to a customer for that amount of money with that reference number. And our customer's been very good because they've put the reference number on their payment. So we know that that money received relates to that invoice. And we click OK and it disappears and the system knows where it needs to go. Equally, we could have, here's a really good one here, spend money. So in this instance, some money has gone out. We can see it's a bank fee for £15. So we can tell Xero, the supplier is the name of the bank. We can select what type of cost it is. So if this was an advertising cost, we'd select advertising, but this one is actually a bank fee. So we'll just select bank fee from our drop down. We can put a little bit of a description in there. If we're VAT registered, we can, you know, put the correct VAT. And then we click OK. And it disappears. So we would work through every single bank transaction that's appearing on the screen and tell Xero what cost category it needs to go into. Now, what's really good about that is that because all that information is in Xero, we can then run some lovely reports to understand our business. I'm just going to show you one, which is a profit and loss account. And this, I think, is the most powerful thing about using Xero or any of these softwares, actually. So I've run our profit and loss account. You can put the date ranges in. You can compare it to last year. You can put budgets in here. You can all do all sorts of clever things. But what this is doing is all of those bank transactions that you've categorized, you've said to Xero, that's a bank fee, that's a sale, that's advertising spend, whatever. It puts it together in this report. So total sales, total costs by all the different categories, bringing you down to your profit at the bottom. So this is real time. So as long as you have reconciled, as long as you have matched all of those transactions in that first screen, told Xero what those cost and sale categories are, this report will be accurate. Now that's incredible. So that if you think back a few slides ago and I said, well, the great thing about this is it's going to enable businesses to look at their finances throughout the year. This is what I mean. So you would be able to then run your profit and loss account any point through the year and see where you are year to date. And that's great for planning for the future, for having a bit of a think about how much tax should I have? I got enough tax saved up? You know, your accountant, you can make, these are all cloud-based, so your accountant can log on and have a look from their office and give you a bit of advice. You can have meetings around this. So that's the absolute benefit of using this thing. And again, there's loads of reports in here. There's all sorts of different things you can do with it to give you visibility of your business. In terms of the quarterly returns would be made directly out of this software. So I can't show you one because the software companies haven't yet released them yet. So what will happen is a button will appear somewhere, which is, you know, quarterly, it's a return or whatever, and you'll click that and it will take you in to do the return. But I'm going to show you how the VAT one works, the VAT return, because it will work in a very similar way. So we find in Xero, it's here, it's in different softwares, but we click on a VAT return and it will take us to the part of the software that does VAT returns. Now, this is a dummy company. It's not linked to Xero and not linked to HMRC, so you can't actually see a VAT return. But what would happen here would be all of the transactions that are going to be included in that VAT return. So that's how it's going to work for your quarterly returns. All of the transactions are going to appear, you know, in some sort of similar screen. That's where the sense checking will take place, make sure it's correct. And then there'll be a big blue button, as there is for VAT returns, which says submit to HMRC. You click that button and it will go off to HMRC. So you can see how important it's going to be that your bookkeeping is accurate and correct within the software in order to be able to produce this return and submit it to HMRC. But that's broadly how it's going to work.
A quick question. So at this stage, so is that something that an accountant would do for us? Would the accountant do that for us, press that button to get it ready and then get that button ready to press?
I would recommend so, yes. So, I mean, it's very, very similar to VAT returns. It's the same with anything. There are people out there who do their own self-assessment tax return. There are people out there that do their own VAT returns, and there will be people out there that will do their own MTD, ITSA quarterly returns. It then comes down to whether you feel you have the skills, the knowledge, the confidence to do that yourself, or if you want to outsource that to a professional. There are plenty of people that will be very capable of doing this themselves, but I also, you know, every year have to do quite a lot of cleanup jobs of DIYs that have gone wrong. So I think the important thing is, if you do decide this is something that you want to do, that you're very clear that you really do understand what you're doing, because bookkeeping is a learned skill. And I think the slight danger with these, you know, Simon and I sort of shout at the telly at night when the adverts are on for Xero and QuickBooks, and they sort of make it sound, well, you just do it yourself, you just do it on your phone, you press a few buttons and it's done. And it really isn't like that. You do need to have some knowledge of, you know, the difference between a P&L and a balance sheet, that, you know, why is it important to ensure your bank is reconciled? What does that mean? All of those sorts of things. So again, going back to what I was saying, you've got sort of less than 18 months to think about this. It is making that plan, really. Do you feel like you've got the skills to do this yourself? In which case, you know, crack on, fully built. Why would you pay for someone else to do something that you can definitely do yourself? But if you're not very sure that you'll know how to do this, that's really when you need to be, you know, bringing in a professional.
Thank you.
Yeah. So has everyone got any questions about the Xero bit? I'm going to move on to spreadsheets next because
we've got about 9 minutes left, Emma.
Right, I'm going to move on to spreadsheets. Okay, so your other option, HMRC has said that it will be okay to use a spreadsheet for now, along with bridging software. So how that would work, so thinking about, we've still got to have our digital footprint. So what we can't do is enter something into a spreadsheet and then enter it into the HMRC system. It's got to be a digital footprint. So there's some lovely stuff called bridging software, which Evolve Accounting has some, we own it. And that will allow us to take a spreadsheet and suck the information from the spreadsheet, put it into the format that HMR requires for the return, and then submit it to HMRC. The only way that's going to work is, so what we would not be able to do is have all of our clients all using their own different versions of spreadsheets, because we will need to set it so that our bridging software looks at a particular format spreadsheet so it can pull the information out and send it to HMRC. So we designed this lovely bookkeeping spreadsheet, MTD ready, and I have another version for rental properties as well. It's slightly different, but they both work in the same way. And a lot of our clients who are with us know that I've been kind of banging the drum about this spreadsheet for about 3 years now, trying to get them all. If you're going to be on a spreadsheet, use this spreadsheet. And the reason is so that they're MTD ready. So, and how it works, so what I'll say with spreadsheets is, bookkeeping software is always the gold standard, right? Because it has been custom made and designed for bookkeeping. Spreadsheets, it's not a bookkeeping software. So it's really got its limitations. It's a sort of quick fix for those who don't want to use software and have quite, you know, a small number of transactions. It's not going to work for you if you've got more than one bank account. So if you've got 2 bank accounts, or if you use PayPal or any of those things, the spreadsheet's not going to work for you. You're going to have to use software. But if you have got a very simple business with 1 bank account and not too many transactions, and you're comfortable using spreadsheets, then this is an option for you. It's very manual. I'm just going to show you. I've already put some data in for one line. So what you'll do is each line will reflect what is on your bank statement. So each one of these lines is a bank transaction. So I've put for yesterday, 4th of December, your customer, Blogs & Co, paid you £500. It's a sale. So we've got £500 in the total. And I've also put £500 in the sale column. So I'm going to enter something live. So let's say today you have gone to Tesco, you have bought some notebooks. It's a minus because it's a cost for 20 quid. And then you also need to put that 20 quid in one of these columns, cost category. So I'm going to put it in the stationery and office cost category, minus £20. And then at the end, I've got some checks. So this first check, it's always got to be 0. And if it's not 0, you've done something wrong. So let's say I forgot to put the 20 quid in the correct cost category. The check says 20, you're £20 out somewhere. Or let's say instead of putting it as a minus figure because it's an expense, let's say I put it accidentally as a positive. Again, you haven't got a 0 in the check, so you've got done something wrong. You put it as a minus, the check's telling you that's correct. The second check is the bank balance. This is a running total down here. It's on a formula. So at the beginning of the year, you enter your opening bank balance, you type all your transactions in, and this bank balance will adjust. So what you should be able to do is look at your bank statement balance, and if the number on your bank statement is the same as the number in that column, then it's correct. If it's not the same, then you've missed a transaction. So, and what we will then do is you would each quarter email this spreadsheet to us, and then we would use our bridging software. Obviously, we'd check it and do everything we need to do, use our bridging software to create the return and submit it on your behalf. But as you can see, that's quite labor intensive. So again, that's it's very manual, it's open to errors, and it's only going to work if you've got a small number of transactions and you've only got one business bank account. But that is something that's offered only to Evolve Accounting customers. That's not something, I think maybe other accountants have got something similar, but this is something we've designed just for our customers to meet the needs of those customers that really don't want to go into bookkeeping software for whatever reason. And that is, I'm going to take that off screen share now, because that is pretty much all that I wanted to go through. If anybody, got 4 minutes left, if anybody had any questions.
Any questions, anybody? No? Any comments or reflections? Jackie? Brenda?
No, that's very, very informative. Very
Bless
informative.
you. Thank you.
Thank
It's,
you.
I know it's a lot, isn't it? Like it's a
It
lot
is a
of
lot to take in.
information. And it's a big, you know, I'm just very aware with all of us, like, you know, we're all really good at the thing that we do in our business, right? Like I'm a great accountant, but ask me to do something with my IT and I've got no idea. And you know, so I think we're all, or my marketing, so I've got the lovely Annette helping me. There is no way that I could have set this up on my own. And that's why I have Lynette's support. So I think, you know, we're all great business owners, aren't we? Doing the thing that we're really great at. But if finance isn't really your thing, then, you know, I think this is an awful lot to take on, and it's a massive change to the way you work. My glamorous assistant has just passed me a post-it note and said for me to put my final screen up, which is our contact details, and he's quite right. So I'm going to do that now.
I was going to say, Emma, so while you're doing that, so in terms of if people come off this, obviously this is an information give. This webinar is set up. We are Evolve Accounting. The vision, mission, and values is to make it easy for people to understand. So we are here to explain and to give you information. But if you do wish to have a conversation, to get into a position like I've become in a position where I rely on Emma for my accounting and payroll and all those things, I just go, thank you, Emma. If you want to get into that position, so what do people need to do, Emma? I would say, is that between now and kind of as soon as possible, really?
Yeah, whenever you're ready. So yeah, contact details on here. You can email us. You can have a look on our website if you want some extra information. Telephone will take you through to our lovely booking people who will book you a new client call, which is free of charge. So we can either do a Zoom like this or a telephone call, and we can just chat through your needs, and I can give you a quote for services at that point as well. So those are the various ways.
I think one thing that I was really aware of, Emma, when I went into kind of getting an accountant, that it's a lot more cost effective than I actually realised. I always thought it would be thousands and thousands of pounds, and actually it's not, is it, necessarily?
Like, so there's different
business, obviously.
Yeah, there's different types of accountants, I think, and where Simon and I, when we created this business 10 years ago, it's a little bit in the, I've been working as an accountant for years, but we sort of planned this for a while, and when we were sort of putting on paper what we're looking for, it was about, I grew up in a small business environment. My dad is a small business owner, so it was about serving small businesses, and small businesses need affordable prices. So I mean, what we said, we're not in a race to the bottom here. Like it's a good quality service and our fees reflect that, but we are not, there are some very big accountants who are pitching at the very big businesses and their fees are as such. And then if you sort of roll into them, you're going to end up with a big fee. Whereas we are very much set up for small businesses. I've worked for many years with very big clients. We made a decision to work with smaller clients, which we really enjoy, and we're set up for that.
So on that note, that's bang on 1:30.
Wow, it's almost like we planned it.
Your throat survived it. Everybody, thank you for joining us. Thanks for your questions. And for those watching back, thanks again.
Thank you.